Okay, good afternoon once again, my friends. I believe today has been very nice. I told everybody who cares to listen yesterday that trading is much more than to just click buy and sell. If you were not in live session yesterday, I implore you to go and watch the video. Go and watch the video. If you go and watch the video yesterday and you come on board this morning and you click the buy of the two trades I gave out, then you will understand why I said yesterday that trading is far, far more than to just click buy and sell. All right. I gave you two trades buy, and it did not take more than 5 minutes for them to enter profit. And I bet it with you, even though it's going to retrace, not now. Certainly not now. Not now. I'm very sure of that. It might retrace, but certainly not now. Why? A lot of planning has gone into it. Right from yesterday, guys. Look at this one. NZDJPY. You see this move? It happens last week, right? When this piece happened, what did I tell you? It's not a setup. All right? It's not a setup. Some people, they begin to trade it. It's a buy. They start buying. Whereas, it's not a setup. After that, it started coming down. Started coming down. Some people say, it's a sell. It's not. It's not a setup. All right? You see, the move down is not a setup. There's no setup here. Okay? You have a move like this. It's not a setup. Even if you say you want to sell here, well, no problem. Because you can tell me that you have seen a three-wave move. Good. But seeing this, I have seen a setup. And where is the setup? I'm seeing the setup that say after impulse, correction comes in three ways. And how do I define these three ways here? You have wave A, then wave B comes in three waves, and then we have wave C. We are trading this wave C here. We don't know where to get to, but we know it will break this top. It will come this way. We are going to take our profit as soon as we break this top, this correction. Once we break it to the upside like this, we take our profit, because any movement from that zone, we expect a move to the downside for the continuation of this move. Simple. This is just a simple technique we have used here. And I told everybody who cares to listen that whenever you want to click buy and sell, there must be a reason why you are doing it. Now I have just told you the reason why I have to do it. Why I have to call for buy of NZDJPY, even though it has moved from this area where you could have gotten the best risk to reward. I don't care, because I know even at this level, even if it retraces a little, it must proceed to the upside, because that is what the theory says. And the person that the originator of the theory did not just bring out the theory just like that. He made observation of what has happened for the past 100 years. For him to depict, a reflection of man's psychology. What happens with 80% of traders? What do they think at the moment? It is what they think at the moment that is printed in form of a chart that me and you are reading. And that is what we are studying. Not many people know that trading has gone beyond fundamental and technical analysis. There is behavioral analysis that you must add to it. When you are studying agree with me, how do they train dogs to be able to deliver envelope, parcel, to be able to go and bring water, to be able to go and do this, how were they able to do it? Psychology, behavior. The dog will look at it. If so thing is happening with so person, he needs so thing. You don't need to tell the dog, he will go and bring it for you. When you get home, you want to open door and you are looking for the key. You can't get it. The dog senses it that you want to open this door. You are not seeing the key. He knows where the key is. It can show you where the key is. It will go there and it will bring the key for you. Psychology is studying. Man has gone to a level where they don't even study human behavior again, animal behavior, and modify and condition the animal to perform a certain task. That is what we are doing here. Are you okay now? So this is the basic thing we are doing. We are following a little impulse, small impulse to the upside. After the fall, after this move, we are following this small impulse, and then this is 3-wave correction, and then we are going. And let me tell you, something very vital could happen here. This trade that we are playing with, as if it's a small trade, will end up being a swing. Ask me why. It will end up being a swing because this could be wave 3 if this is long, guys. If this wave is longer than this, if we say this is wave A and this is wave B and we are looking for wave C, if it's long beyond 1,618, we know that this is no longer ABC structure. It has become 1, 2, 3, then we expect correction here, and then 4, and the next one 5. Okay, and in this case, all this that we think is an impulse has become a correction. It's a pullback. It's a single wave pullback. Okay, for this trend to resume, this trend here will resume. Everything you see here is being corrected by this one, and the trade we want to take now that we think is a small trade, correction and breakdown lower, will just be the beginning of a new trend. All right, so we're going to be monitoring these trades. These 2 trades I've given you, we are going to be monitoring them closely to see if there's going to be a possible conversion of a small trade setup to a swing trade idea. Okay, so that is it. Then I want to talk about risk management, risk and trade management. Many of you guys, I give a lot of trades that I make money from those trades, and when I'm out, guys are still in. Guys are still in. Their profit retrace, and at the end of the day, they make nothing. No, it shouldn't be, guys. It shouldn't be. When you are in a trade, like, let me use this as an example. Let me use NZD JPY as an example. This trade now, anything that make this trade to break here, if you enter here, let's say you enter here, anything that make it to break to the upside like this, all right, just break even this trade. Just break even this trade. Nothing. Anything that make it to come here is a reversal. It means that your setup in the actual sense might be wrong. But I told you initially that once it break to this level, in that case, this wave here is equal to this wave here. This one at the middle, correction, regular flat. Once this wave A here, this one, is equal to wave C here, this one, then this has formed a complete structure to correct which move? To correct this move. Let's change the color. In, not red, red is not good. In blue. This move in blue will have been adequately corrected if this wave we are trading can move to this level. And what is this level? What is the Fibonacci level of this area? Let's go. I'm just teaching you the techniques that you will use in your trading. This is what you do. This is what you should be doing every day. If you take the fee from here to here, all right? This level I have shown you that you see that we are expecting this to get to. That level is what? 0.5 fib retracement. And I mentioned it in my video yesterday that I will never, and I repeat the 3rd time, I will never click a sell. After impulse, if I have a correction, I will never click a sell until the correction has gone to 50 to 61.8% retracement. Honestly, if it doesn't get to this place, or get to this 61.8, I'm not going to sell. And even if you get there, there are things I'm looking for to confirm to me that this trade is now ready to fall. If I see fundamental to back it up, fine. If I see a bearish impulse that is nicely formed and a little correction, I know it's going down, I will follow. Other than that, I won't. Okay? So you must see your retracement come to 50 to 61.8% retracement. At that level, you can take 80% of your profit and leave 20% there. What is the essence of the 20% you are leaving here? In case this wave C can go extraordinarily long to form wave 3, then you know that wave 4 will form, and then you are proceeding to the upside. And then the 20% you are leaving behind will continue to increase in profit. Is that okay now? That is a NZD JPY. All right. The same thing, the same scenario is playing out in AUD JPY, but with a little difference. With a little difference. Now let me show you the difference that we have seen in AUD JPY. That makes it to be a little bit different from what you saw in NZD JPY. Okay? Now, let me show you something. If you have an impulse like this, all right? If you have an impulse like this, and you have a 3-wave move, that is correction. And this correction is meant, after this correction, you are meant to go down, okay, for continuation. But I want to ask you, what of a situation where this 3-wave move has not made even up to 50% retracement of the impulse? Will you expect it to fall? I told you the normal thing to happen is for a retracement to come up to 50% or 61.8% retracement. Now, let's see this, guys. Just hold on. Watch something now. From here to here. This is 38% retracement. I told you I will never click a sell on 38% retracement. This is 38% retracement here, guys. Here is 38% retracement. Is selling. Some people will say, this market has come to 38% retracement, and they click a sell. They are selling. Look at it, it has taken them out. You don't sell a retracement at 38%, except with one condition. I will tell you the condition later. Let me finish what I'm doing. Now, what I was saying in essence is that if you have a 3-wave move like this, and it's not even up to 50% retracement, and you are having a move here that is depicting a correction. That is depicting what? A correction. Then you know that there's going to be an imminent breakout on the upside to achieve a retracement level that is up to 50% retracement or 61.8% retracement, as the case may be. So based on that, I say, okay, if that is the case, then we may be having W, X, and Y. Correction and go. And by the time it makes this WXY structure, then it is then that this guy that I've put to the downside will have succeeded in coming up to a retracement level of 50% or 61.8% retracement. And it is at this level we begin to look for sell opportunity. Guys, this is where you now begin to look for sell opportunity. Not at this stage, not at this stage at all. Not at this stage. You cannot tell me to be looking for sell here. Are you getting it now? That is how to go about charting. This is how you do your chart. This is how you plan your trade. As soon as I saw this yesterday, last week, as soon as we saw this impulse last week, yes, I said the first set of trade we are going to be taking this week are going to be a counter trend trade. They are going to be a counter trend trade. Oh yes. I said they will be counter trend trades. I'm going to use the opportunity to teach my VIP traders how to handle counter-trend trades. Okay? In a counter-trend trade, if you see a three-wave move to the upside, and this three-wave move is not up to 50% or 61% retracement, if it's not up to 50% or 61.8% retracement, then you have to wait for correction, and after the correction, guys, you move to the upside. Okay? You move to the upside. Okay? So it's as simple as that. Let's consider another example. Let's consider another example. Now, let's see GBP USD. Let's look at GBP USD. I told you in my weekly outlook that this move is still not convincing me that we are moving to the downside. There's no conviction here. All right? There's no conviction here that we are moving to the downside. Okay? But for us to take a buy or a sell, there are things we look at. Let's go to 2 hours time frame. You notice something. After this move to the downside, you have a three wave here. Right? Do you know that you have a three wave here? Can you see it? Therefore, for us to have a three wave to the upside, you need an impulse here. If you can come to this level and correct here, you don't have, there's no basis why you should not trade this breakout to the upside. There's no basis. There's no basis. This has therefore formed what? WXY. WX and what? Y. But you ask me something. You ask me something. But it is possible that this WXY has not even come up to 50% retracement. Why should we be looking for sell opportunity here? And I told you before that you must allow your trade, your retracement to come to 50 to 61.8% retracement. That was what we said. Okay. Remember, I told you there's an exception to the rule. There's an exception to the rule. And it is that exception that I'm going to tell you this morning. Okay? I'm going to tell you the exception to the rule. And the exception to the rule, I got it from my several years of back testing and application of a wave principle that tells us that wave 2 of an impulse, if it's a zigzag, can come down to as far as 50 to 61.8 to even 78% retracement of wave 1. But if it is a flat correction by definition is a sideways corrective structure that need not to make a deep retracement. So if a sideways corrective structure need not make a deep retracement, why should you expect it to come to 50 to 61.8% retracement? So wave 2 of an impulse necessarily will come to 50 to 61.8% retracement if it is a zigzag. If it is not a sideways correction, but immediately it is assuming a sideways correction like a triangle or a flat, never expect it to come to 61.8% retracement or 50% retracement. It will necessarily do a 38% retracement for you. But if it is 50% retracement, great. Are you getting it now? Therefore, if you have this kind of impulse and you are having a 38% retracement from here to here, if you're having a 38% retracement, you can look for sell opportunity if this is a WY or a flat corrective structure. or a triangle that is forming there. You don't wait for 50%. You don't wait for 61.8% because the structure is developed, or the structure developed based on sideways. And once it is sideways is naturally, naturally developed not to induce to the upside. It induces sideways. So you don't expect a deep retracement in that regard. As soon as the corrective structure, WXY, is completed, you have no other option than to move to the downside. Is that okay now? That is an exception to the rule that I was telling you. It's an exception. All this I'm telling you, you can't see it in any book. It's not by theory. It is what we use now is when you understand the theory and from your years of back testing, you'll be able to come up with your own rule, all right, that is in tune with market behavior. You'll be able to come up with your own theory that is in tune with market behavior, that when it is applied anywhere, it produces great results. That's what we are saying. So by understanding the theory and by its application every day, we have discovered a lot of structure, a lot of structural changes in the market that we can, based on that, formulate our own pattern and theory and say, this is my additional input to the theory that had already been laid down. All right? So that is how you approach the market. Let's look at card, GBP card. You see what I've done here? You know that in weekly time frame, we have forecasted GBP card to move to the upside. That was our forecast. We are saying that GBP cards will move to the upside. But you agree with me that in an attempt to move to the upside, it developed a diagonal here. You see a diagonal here. Can you see? This is rising with the, some people call it rising wedge, right? It's a diagonal. Okay? Now, every rising wedge, I don't know the strategy any of you trades. All right? But some of us that trade Elliott wave theory, we don't call it a rising wedge. We call it a diagonal. Every diagonal must break down in 3 waves. What do I say? Every diagonal must break down in 3 waves before the continuation to the upside. Oh, yes. If a diagonal is appearing in wave 1 of an impulse, it must break down in 3 waves to form wave 2. If a diagonal is forming in wave A of a correction, it must break down in 3 waves to form a B wave. If a diagonal is forming in wave 5 of an impulse, it is a leading diagonal. It must break down in 3 waves to form ABC correction, correct the entire wave and proceed to the upside. All right? So if we have that understanding, guys, then you can see clearly that this diagonal has broken down in 3 waves. But you agree with me that these 3 waves you see here, these 3 waves you see here is not enough correction for the entire move. It's not enough correction. So what we are forecasting is that there is possibility of having a WXY structure here. This is an impulse, this is an impulse. You can have another one here like an impulse. So this will become A, this will become B, and this is C in 3 waves. All right? Sorry, this become W, X, and Y. If you don't understand why it is WXY, come and register for the course and learn the course. Okay? This is WXY. After you have this WXY here, we expect this to flip to the upside. I'm not going to miss it, guys. You can see it is right for me to give you a buy opportunity of GBP card at this level. But I won't give until I see something. There's something I am expecting that will give me that belief, that confidence that I'm going to break this top. I'm going to get to this top. I'm going to form a regular flat. Can you see that exactly? It hits the low of this one and it turned. It turned. Can you hear me, guys? Guys, can you hear me? If you are hearing me, can you type 1 on the chat box? Can you hear me? If you can hear me, okay. Others are hearing me. So if you are not hearing me, guys, please just check your device. Others are hearing me. Okay. So I could have given you buy here. In other guidelines, in other methodology of trading, at this level now, they will ask you, they will call for buy, say buy GBP card. But we don't do that. We don't want to take bottom and we don't want to trade bottom and top. No. What we are expecting is that we want to see a move here that is very strong, that indicates to us that people that are demanding for GBP against the card, they are in the market. Then we look for correction here. After this correction, we know buying this breakout here will give us this level because that's what we have forecasted. So as soon as this three-wave structure in the middle completes, we are going to look for this three-wave down because you have what? You have this three-wave down here. It was not enough for a move to the upside. So reason you are having this correction and immediately you have a three-wave down that break this low here, get ready for your buy opportunity. Don't waste time, guys. You won't waste time. You have to get ready for the buy opportunity. Are you getting the gist now? That is how you approach trading in the right way. That is how you approach it. Why? Because we have forecasted from weekly time frame. Look at it. We have made our forecast from weekly time frame that we are going bullish on GBP card. We are going bullish on GBP card. And how did we come about the bullish structure of GBP card? We have, after this impulsive wave down, we have identified this three-wave structure up, 3 down, and then 3 up. We are seeing this as a triangle. And then after the triangle, a breakout to the upside. This is what we have seen from GBP card. And this is W. A three-wave structure that is against the trend is called W. And three-wave structure in the direction of the trend is called X. Another three-wave structure against the trend is the Y. Okay, after this Y, it's possible to have a move to the downside. If and only if this Y has retraces the impulse up to 50 to 61.8% retracement. So it is likely that we will not have Z in this structure because by the time you are having another X and Z, that Z will have broken the level of the impulse, and it is not allowed. Correction cannot break the level of the impulse. It's not possible because the rule says wave 2 must not break below the level of wave 1, the beginning of wave 1. That is it. So whatever we say is not in fluke, it's based on theory. So once you understand the theory, you are on top. Okay? So if you have this understanding that you are on your way to the upside, then what are you to do? Go back to 4 hours, guys. Go back to 4 hours. You just need to go back to 4 hours and begin to look for buy opportunity. And that's what I have shown you here. I've shown you here that we are not buying, we are not doing anything on GBP card right now. We want this three-wave structure to develop. We want, after this, the breakdown of this one is not enough retracement, and this is an impulse, and this is an impulse. This one can form this structure. Okay, come down, go back up, come back down, and off it goes. It's simple, guys. Off it goes. You see, have your three-wave structure, WXY, WXY. By the time you make this WXY, it must have retraced this move here. And then from here, you move to the upside. Okay? So that is it on GBP card. All right? We're having same bias with Euro USD. Okay, I gave you 2 alternatives that I'm expecting on Euro USD. Okay, I'm seeing this WXY structure there, 3 wave down, Then I'm seeing this is an impulse. Let me draw it clearly. I'm seeing that this is a correction, it's an expanding flat. I'm seeing that this is an impulse. I'm saying that this another impulse will come here. Is that not three waves? A, B, and C. Look at this one. You have a wave down, you have another one, and down. That is A, B, and C. Then, these three waves down that form A, B, and C is a W. And then these three waves, with the B wave forming a three waves again, A, B, and C, will give you X. And then you should expect 1, 2, and 3 to break this low as a Y. This is a WXY structure, and this move that comes this way will now be projected to go up here. This is a complete forecast of Euro USD. Is that okay, guys? This is a foundation of Elliott wave theory that must be known. You must know it. Otherwise, it will be as if you are just playing in the market. I told whoever cares to listen that I have traded all forms of methodology you can think of, support and resistance, the market maker strategy, the this, the that, the this. I've never seen anyone that you can trade with confidence like Elliott wave theory. It gives me so much confidence, so much control of the market. I told a group of people, I think yesterday, or in my video yesterday, I made it clear to them that when you hear that indicators are lagging, it is the candlestick that is even lagging to Elliott wave theory. Oh yes, quote me anywhere. I say indicators are lagging. Where the market is going, we already know. No, sorry, I'm not saying indicator. Candlesticks. Candlesticks are lagging to our analysis. Can you see what we have done on Euro USD? Where we have marked, has the candle reached there? But we are saying that this is where the candle must follow. The candle must go this way. And after the candle goes this way and break this top, the candle must come down. And you will see if I leave this chart like this and this analysis play out, come 3 weeks, 2 weeks to come, you will see exactly how the candle just follow it. So which one is lagging the other? Oh yes, candlesticks, they are lagging to the power of forecasting of Elliott wave theory, honestly. That is it. Does anyone have any other pair we should look at? I don't want to make the session to be too long. Even though we have unlimited time, let me not make it too long. It shouldn't be more than 1 hour. Does anyone have any other pair we should look at so that we'll look at it together before we go, okay? Just chat in the chat box if you have any other pair. If you have any pair you want us to check. Okay? Yes. Somebody said good. I traded good. Yes. You can see that in the last 2 weeks or 3 weeks, I did not talk of good because gold has not come to a level that I desire to trade. It had not come to that level. But today, I saw that as soon as it breaks this low, gold can come up at any time. Anything that can trigger gold. What do I say? Always take note of something. Let me teach you something today. When you have this move and you're having correction this way, even if you don't know how to read Elliott wave theory, can you see that this move here has broken this? Do you see that this move here has broken this? All right? If it goes like this and come down and break this, can you see it has broken it? So anytime the last move has broken the previous low, look for opportunity to buy. If you buy and at this level it came down again and has broken the previous low, look for opportunity to buy. It must surely buy. So if when you did the buy here, you got break even. When you break the previous low, do the buy again, it hit break even, no problem. When it broke the previous low, you buy again. This one does not hit break even. It went all the way. So you have made a break even, 3 break evens, and you are making 10% return on investment. You are a super trader. So when you see a pattern this way, all right, when you see a pattern this way, this pattern is only telling you that you are going to have a move to the upside. And if this buy that you have taken here, if this buy is corrective to the upside, it's corrective to the upside, it's an indication again that it's going to break to the downside. Look at this, guys. Can you see? Corrective. Can you see? Corrective. Can you see? Corrective. Can you see? Corrective. Every corrective move you see to the upside is an indication of a downward move in a buy setup. So if this move is not fast, if it's not fast, I will get out of the trade, because that will show me that I'm going to still have a move to the downside. So I will wait again. As soon as I have this downside, I take a buy again. If you know your structure, if you know the structure that you are trading, you will not be afraid. Okay? That was why I took a buy on gold. But the best I had wanted, if it had given me this move in 4 hours, go to 4 hours. If it has given me this move, hold on. If it has given me this move and corrected this way, I will give everybody the trade in the group. It's not every trade I give you. If I'm getting a trade that I know I'm taking risk entry, if I'm doing risk entry, I don't give to the public, because I know how much I've exposed my account to in the trade, and it will not affect me even if anything happens. That's a risk-taking entry. You don't take a risk and expose everybody to the same level of risk. It's nonsense now. You don't do that. You don't try that. But when you know that this setup you have seen, there's no risk there, you can afford to give everybody, and they take it. And nothing will happen. It will work well. Is that okay now? That is what it is about gold. If you have not entered gold, no, there's no need to enter buy on gold now. Just wait. Let impulse, good impulse come up to show two things. If you see an impulse like this, it's giving you two information. I'm not saying correction now. I say impulse. If there's a strong move to that upside, it's giving you two information. Number one, that the corrective sell to the downside is over. It's telling you that this corrective sell from here to this place is over. That's one information it's giving you. And then if you now see a correction after this impulse, you see a correction like this, it's telling you that this particular piece is an originating impulse. I call it originating impulse. It means that the beginning of the next wave. And then this is originating correction. After the breakout of here, once you buy here, this trade will never come here. It's going to the upside. It's going to the upside. That is trading, guys. This is what is called trading. You can see all this markup here and there. There are a lot of planning. We have done a lot of planning into it. Okay? So trading is more planning and less action. How long did it take you to click buy on NZD-JPY, click buy, AUD-JPY, click buy, NZD-CHF? How long does it take you? It took you less than 3 minutes to actualize that action. But actually, the planning that had gone into those setups had been since on Friday, throughout Monday, and throughout the night and in the morning, until we saw that it was ripe to take. So trading is more planning and less action. Is that correct now? Let's see if you have another person that have another pair to do And if there's none, we call it a day. All right, there's none in the chat box. So I'm going to upload this video. If the video is great, I'm going to upload it to YouTube. You can have access to watch it there again. Have a pleasant week, guys. Place your trades on NZD, JPY, AUD, JPY, and NZD CHF. Please control it, break even at the appropriate level, and allow the trade to run. Make sure you return today with profit. We're always in blue, guys, and we are known for that. Have a great day, everybody. Bye-bye.